How to buy Hyundai stock. An investment strategy is basically a plan for investing your money in various types of investments that will help you meet your financial goals in a specific amount of time. Each type of investment contains individual investments that you must choose from. The stock market is a type of investment, but it contains different types of stocks which all contain different companies that you can invest in. Common stock is a term that you will hear quite often. Anyone can purchase common stock regardless of age, income, or financial standing. Common stock is essentially part ownership in the business you are investing in. As the company grows and earns money, the value of your stock rises. On the other hand, if the company does poorly or goes bankrupt, the value of your stock falls. Common stockholders do not participate in the day-to-day operations of a business, but they do have the power to elect the board of directors. Along with common stock, there are also different classes of stock. The different classes of stock in one company are often called Class A and Class B. The first class, Class A, essentially gives the stock owner more votes per share of stock than the owners of Class B stock. The ability to create different classes of stock in a corporation has existed since 1987. Many investors avoid stock that has more than one class, and stocks that have more than one class are not called common stock. The most upscale type of stock is, of course, preferred stock. Preferred stock isn't exactly a stock. It is a mix of a stock and a bond. The owners of preferred stock can lay claim to the assets of the company in the case of bankruptcy, and preferred stockholders get the proceeds of the profits from a company before the common stock owners. If you think that you may prefer this preferred stock, be aware that the company typically has the right to buy the stock back from the stock owner and stop paying dividends. Investing in bonds is very safe and the returns are usually very good. There are 4 basic types of bonds available, and they are sold through the government, through corporations, state and local governments, and foreign governments. The greatest thing about bonds is that you will get your initial investment back. This makes bonds the perfect investment vehicle for those who are new to investing or for those who have a low risk tolerance. The United States government sells Treasury bonds through the Treasury Department. You can purchase Treasury bonds with maturity dates ranging from 3 months to 30 years. Treasury bonds include Treasury notes, Treasury bills, and Treasury bonds. All Treasury bonds are backed by the United States government, and tax is only charged on the interest that the bonds earn. Corporate bonds are sold through public securities markets. A corporate bond is essentially a company selling its debt. Corporate bonds usually have high interest rates, but they are a bit risky. If the company goes belly up, the bond is worthless. State and local governments also sell bonds. Unlike bonds issued by the federal government, these bonds usually have higher interest rates. This is because state and local governments can indeed go bankrupt, unlike the federal government. State and local government bonds are free from income taxes, even on the interest. State and local taxes may also be waived. Tax-free municipal bonds are common state and local government bonds. The interest may be a bit lower, but again, there is little or no risk involved. For best results, when a bond reaches maturity, reinvest it into another bond.